Good morning, everybody. Welcome back to another live stream here with the Everyday Growth Advisors. I hope you guys are doing great today. Welcome, welcome, welcome. Let me just get this sorted here. It was a crazy week last week, and lots to talk about today as we're heading into a new week here. FOMC and Big Tech will be reporting earnings this week. We have quite a fair bit of earnings that we'll be reporting. Here's a quick snapshot of the companies that will be reporting earnings. We have McDonald's, we have Chipotle, we have Microsoft, Visa, Coca-Cola, UPS. We have also Etsy, we have Meta, Shopify, Boeing, Spotify, Waste Management, Hilton, Ford, Qualcomm, Pfizer, Apple, Amazon, Roku, Intel, MasterCard, some airlines, Merck, Altria, Hertz, ExxonMobil. Really jam-packed schedule for this week. And then FOMC meeting on, I believe, Wednesday, which is usually when they hold it. And that's the rate decision for July, which is baking in a 75 basis point rate hike at this point. Coming off what yesterday was a potential short squeeze, which we spoke about all week. Let's kind of review what has happened and look into what we're expecting this week, rather. So last week we saw a lot of price action of underappreciated or underallocated pretty much risk in financial markets. So a lot of people who were kind of here, they were scrambling to get exposure, and that's what really set this whole rally off. A lot of people were underexposed to equities, and we saw that in mostly the week, a lot of the price action that we saw pushing prices up was due to people starting to fear missing out on this rally. And that's what really pushed it up on the second leg here. The first leg was pretty straightforward, kind of breakout here and then the pullback. And then overnight, a lot of risk piled on, and now we're sitting close to 39.90. And 39.90 is still a key level here for us to break out from or hold above in order to see more upside, which will be the 40.60 and then 41.40, which I said last week. 4,200 is ultimately the level that we want to retest in the next couple of months if we really want to see a bullish rally take off. But as of right now, we don't see enough jet fuel for that to just happen so far. So what has been actually happening has been mainly a mixture of FOMO and also shorts covering their positions, because as the market heads higher, it's kind of like a vicious cycle, because the higher prices get, the more it's painful for shorts, and they start to cover, and the opposite of a short trade is long. Therefore, they push the price up further and cause that rippling effect back up in the market. Just a couple of updates also with earnings from last week. So despite the, this is just commentary from JP Morgan. I'm going to read it to you so that you kind of have a good idea. So this is not my own. This is factual reporting from JP Morgan. And they have to say, despite the higher costs and decline in consumer sentiment, the second quarter of 2022 operating margins have remained resilient and are currently sitting at 12.8%, above the historical average of 9.9%. With 22.9% of the market reported, our current estimate for the S&P 500 earnings per share is $54.28. If realized, this would represent a year-over-year growth of 4.3% or a quarter-over-quarter growth of 10%. So we're actually seeing companies beat better and do better, which is actually pretty surprising, wouldn't you think? So obviously we already expected them to guide down, which is what we were already expecting. And if you have been attending live streams, I've been speaking about that, how companies will guide down and then beat their earnings later on. It's quite expected. This is quite normal in the stock market. When everybody is ultra pessimistic, what companies do is they guide down their earnings, and then they wait for prices to come down, and then when they beat their earnings in the next go, the stock pops back up. So it's kind of like they time this up so that they can do buybacks and stuff like that, right? So if we look at it more in a granular view, you'll see that at the sector level, then you can see obviously energy, materials, and industrials were the sectors that were really pushing sizable growth in earnings. And JP Morgan also mentions that US airlines were interesting because results were positive, as many airlines beat profit estimates on the back of stronger than expected demand, even amid higher ticket prices and an uptick in flight disruption. So air travel is rebounding, and if you want to look at a play for that one, you got to look at JETS, JATS. That's JETS. That's the airline ETF, which is in a nice little pennant here. We haven't really quite taken this trade yet because we didn't get a definitive break above the $18.15 level, and then it rejected late last week. So we didn't want to play this just yet on the team. BlackRock also says that last week's CPI data showed inflation reached fresh 40-year highs in June, and this cements the case for a significant Fed rate hike in its policy meeting, which is later this month, which is pretty much this week, right? So that's on the macro standpoint. That's what you really need to know. Now, on the technical standpoint, if we keep rejecting 39.90 today, then we're likely to come down and revisit 39.16. And then if we reject 39.16, and then we should pivot down to 38.75. If that goes through, we'll pivot down into 38.11. So we'll follow this all the way through the week, and on Wednesday we will see where we come to. If we can close above 39.90 today, that's bullish to get to 40.60 within the next 1 or 2 trading sessions. This all kind of goes by and is going to be all based on how we see price action moving in the next trading session or so. Another thing that you also have to take note is the Nasdaq here, and the Nasdaq is moving in quite a different sense to the S&P 500, and the Nasdaq has more room to cover in order to break this pivot to the upside. So 12,814 is the level for the Nasdaq to kind of break and hold above. We need to close above this level, and that will be a bullish pivot for the Nasdaq. If not, if we reject here, then we are likely to revisit these downside levels on the Nasdaq, which will be 12,000 and beyond further down. So that's the pivot structure that we're looking at for this week. And depending on how earnings are going to go, we're going to see moves either way. Now, I am of the view that the market's going to take some time to digest this move, and where we might chop sideways until Wednesday when the FOMC meeting happens, and then we know more information. Another thing that could happen would be high volatility moves based on earnings after earnings plays. So this week is really not the week to apply a lot of risk. I'm just going to be really candid and say that. This is a week to sit back and really observe and see what happens with price action. The real move should happen next week. That's typically how things go, okay? Bond market has also been trying to recover pretty strongly here, but hasn't really taken off just yet. We really need to see a definitive break above 120 on TLT for the fat side of the bond market to really recover, and for us to see credit markets rebound here in terms of yield coming down and bond prices going up. The VIX, however, as we mentioned last week, bottomed out here and looks like it might be moving to the upside, right? It bounced on the bottom trend line, and it looks like it wants to move to the upside. Break above $25.92 or $26 roughly would send us into $29, and then $29 break would send us into $31.50, and so on and so forth. So the VIX levels we are approaching to are going to be in elevated levels once again. This means options pricing becomes more expensive. And remember that this week, if you're trading, keep that in mind. Look at the implied volatility before you take a trade. Don't just go blindly into these trades, because it could be really expensive, okay? Also, not to mention that utilities and industrials are going to be the defensive sectors here. So watch out for opportunities in XLU. This is one sector that I'm watching right now. Utilities are usually defensive during earnings period. It's just a great way to chase some returns because of the fact that stocks are typically more volatile, and so the volatility seeks other kinds of areas in the market. And we're kind of in a falling wedge pattern in the utility sector here. Also a bull flag, right? So a break above $70 on XLU is really pretty bullish if we can bounce on $70 and then go for that $71 to $72 target up here based on the Fibonacci extension levels. So that's what I'm looking at with XLU here. And in case there's too many lines, sorry, I meant to make it a little cleaner for you guys. There you go. We want to see a break above $70 here. Bounce on $70 as well. So yeah, there you go. Bounce here and then target here pretty much. This should be TP level. So yeah, we have, pretty much nice opportunities here. And then Apple, it failed to break out all the way up into 158. We were looking at this as a potential target from last week, but Apple did rally pretty strongly, right? We covered this ticker last week. Rejection, 156. So if a break below 151.70 sees the downside on Apple, right? Into 148, and that's how this will probably go. This was not hit, so now if we're looking at the pullback level here, based on this existing wave, which is not complete, then the 50% pullback on this wave is going to be at 145.20, which is this level right here. Apple is rejecting a dual zone right now, which is the previous support level. You can see that now it's being used as a resistance. This was previous support here. So this is going to be an interesting level. It's a key pivot point for Apple. A break and a hold above this level sees bullishness and a rejection here, and the break below 151.71 we'll see 148 and a retest of these levels on the downside. So Apple is a pretty easy one to play this week. If you can just be disciplined and patient, don't take things that you don't see any opportunities in. Also watching Roblox closely. This one has broken out and has been sitting on its support for a while. We want to see ultimately the retest of $51. It could make a big move, but we haven't seen that follow through. We've been seeing a lot of rejections, right, coming through in the $41 level. A lot of rejections in this region. Just a lot of supply, heavy supply coming into this. So we're still watching for opportunity for Roblox, but it really needs to break above $43, $44 for us to really take that upside. And it needs that momentum. It hasn't really found that momentum yet. GM is another one that I'm watching this week for a possible breakout above $36 and then play that up into $39 or $40 for this retest into this upside over here. Decent risk to reward ratio. If you take it here, you go risk off pretty much around here. That's a $2 risk, and your upside is roughly about $4. So that's a nice risk. 1:2 risk to reward ratio. I like these kinds of trades. They're pretty decent in terms of just price action and the risk to reward ratio. Enphase Energy from last week and continue to break out from this falling wedge pattern. Break above 226 is going to be bullish, and then it has a huge room to run to the upside here. But if it gets rejected here and breaks below $200.50, I'm looking for a downside pivot back down into the 180s or 190s, and that will be an easy little day trade / scalp to take this one to the downside. Yeah, I'm about to cover BABA right now. Thanks, NP Christopher. Appreciate it. All right, let me do the ticker breakdowns right now. So I just covered the ones that I was watching for this week, and now I'm going to cover the ones from the stream. Okay, so let's look at it. Baba first. Okay, so Baba, pretty straightforward. This one has failed to reverse out of its downtrend. On the weekly, so you can see it on the weekly. Still within the downtrend, but it's entering accumulation phase. So this is your markdown phase, and now it's entering accumulation phase. And the clear definitive number that you want to really break out of is 127.75. 127.75 is going to be the, well, let's just call it 131, honestly. 131, right? 131 is what we need to break out of in order to see upside pivot on Baba. That means we need to strongly break above 131 and then bounce on 131 for that upside. Right now, it looks like it's going to retest the downside, but I don't want to try and guess if it is going to do that. So let's go back into a smaller time frame to see what's going on here. Well, if we want to look at this pivot point here and look at where all the key levels are, then we can take this previous wave and we can plot the fib for that previous wave from top to bottom for this whole wave. So this is the top of the wave that I'm looking at, and this is the bottom of the wave that I'm looking at. This will take as a fake breakout, and then the pullback, and then the completion of the wave is here, and this is the next wave that's starting here. So this is the end of the wave, and this is the beginning of the wave. For this wave, the pullback is at the 50, which is exactly where we are right now. So the 50% retracement is where we are right now, and that's where the pullback is likely to happen. Okay, it's likely to happen. So this is a good bounce level. It's also a dual zone, right? You can see that this is where support and resistance both does occur. And if we look at the volume profile, let's go look at that real quick. We should be able to see some interesting stuff with volume as well. So this is also a pretty high volume area for Baba, right? Pretty high volume area. So this volume shelf here is obviously a key level, and then if we break above it and start revisiting this levels, we need to break above this, and then there's a lot of lack of volume here, right, which will send us further and higher. Break below this, so a break below 96.81 is where we can take Baba to the downside. So I've set an alert right there. I have alerts on both sides. So break below 96.81, then we play the pivot to the downside. Keep your risk off around, let's say, $100, and that's a nice 1:2 or more risk to reward ratio. So that's a decent trade as well heading into this week if you want to play Baba. That's the breakdown for Baba. Okay, I hope that's helpful. And then Boeing. So Boeing is another interesting one. Okay, so it went through a upward channel and then a lower channel, broke below, and now it's kind of curving in this cup kind of formation. Now Boeing will only see continued upside on a break or a hold above 167, 167.61. 167.61 is really the main level here, which we need to break and hold above. The volume and point of control for volume is also in this region. Only a break above 180. What is it? Let me see. 190, then the bullish case starts. Apart from that, this is still all rejectable levels. Rejectable, rejectable, rejectable. All these are rejectable levels. So any rejection here would be possibly downplayed, and then you can take short position here. On the 4-hour though, you know, it seems like there is a big volume liquidity void here between 160 and 180. So if a big rally happens, my recommendation is not to chase it. Watch what happens at 167 and 170 before you take anything here, because it could get sucked into a unnecessary bull rally here. That's just my 2 cents on Boeing. I hope that's helpful. Okay, how do you feel about Coinbase? Let's see. Oh man, this thing has got murdered. Coinbase is directly performing proportionally to Bitcoin. So looking at Bitcoin is a good indicator, first of all. I haven't looked at Bitcoin in weeks, so let me have a look at this real quick. Let's see. Well, Bitcoin surprisingly, oof, the next volume shelf is all the way down to 12,000 roughly. It looks like it could continue bleeding all the way down here. I mean, this is if the case for Bitcoin continues down. I don't personally follow cryptocurrency pricing that much, but from a pure technical perspective, this does look like a bounceable zone. And if we do break out, then the alert goes above 24,500. We see 29,000-ish. And below, you know, I would go below this range at 17,300. Then the shorts will start to pile in on Bitcoin. This rally on Bitcoin was really not anything at all compared to the equity rally we had. So a lot more risk taking in equity markets than in cryptocurrency markets, maybe specifically for Bitcoin. So that's my take on this. And if you go back into Coinbase, then you'll see this is pretty much exactly the same chart. So here the pivots really have to be pretty tight, and you're looking at above 80, 85.50. Above 85.50, you would see a possible bullish case here, and then below, I want to say $40, below 40, then you see the bearish case. I don't like playing the upside here. Obviously, risk to reward ratio is terrible. Playing the downside is nice if you can get a confirmation, and that confirmation would be on the 15-minute. So you would have to see it reject onwards and, you know, all the way through this key levels. Pretty much reject and come break below 65.92, I would say. This would be the key level to break below for that downside pivot. You can see this is the key levels here from the previous support level. It would have to break this and then reject it for that downside. So below 65, 62 roughly would see downside all the way down to at least 55 here. And then if it breaks further from there and starts rejecting, then you can see that further $40 slide all the way down into the bottom here. So playing it pivot by pivot here is going to be really important. Looking at this based on how you're observing the price action. Was that helpful for you, Nelson? I hope that was helpful. Okay, great. Yeah, that was great. I appreciate you guys coming with the tickers, and you know, I hope that the charting helped you out somewhat. Any questions regarding to charting at all? You can ask any questions you have. If not, you know, I like to keep these short and sweet. We have definitely a great you know, market trading ahead of us, and yeah, we have a whole snipe list that's put out 5 tickers for the week, which I've already shared on the Discord. And yeah, if you're interested in joining the Discord, links in the description below. And for those of you that are already there, I'll see you on the trading floor in a little bit. So yeah, let me see. If you guys have any questions, post it below. Also, thanks for liking the stream, guys. I really appreciate it. So if you have questions or want me to cover any additional tickers, go ahead. I'm gonna wait like 1 or 2 minutes for you guys to type anything, because I know the stream has a little delay. But I'm here, and I'm ready to do any ticker breakdowns that you need me to do. Also, the weekly newsletter is out. I don't know if you guys have signed up for it. You should definitely sign up for the newsletter. The newsletter is awesome. It's very informative and goes through a lot of my thoughts for the week. So I highly recommend that if you haven't signed up for the newsletter, it's free. Go sign up for it. It's on our website, or you can go to our Instagram page and click on the first link in our link page, the linkly, which is right here. Sign up for the newsletter, click this, and put in your first name, email address, and boom, you're part of the newsletter. Really easy. Sign up for it. It's gonna help you out a lot. So yeah, we've been putting out a lot of video content lately, so I hope you guys like that as well. But yeah, all right. Well, I don't see any questions. I'm gonna end the stream right here, and I'll see you guys on Wednesday for another one of these. Be safe, stay non-biased. This week is gonna be choppy, so be careful out there. And peace, guys. Take care.